Here in this video, we're going to get into everything you need to know on the day with AMC stock. AMC is down 0.71%. Today, we have a big catalyst coming here in after hours. That is going to be GME earnings. GME has the potential to send AMC stock up or down in quite a big way. So we'll talk about my expectations for that one, give you an overview of what's going on today in the markets, as well as specifically with AMC. Now let's go ahead and jump into it. Hit the like button and subscribe to the channel. Now the first thing I want to actually say is what we got today was pretty much a Goldilocks data report. And that Goldilocks data report was your ADP employment change. Now, your ADP employment change is so closely correlated to non-farms, typically, right, that if you get a miss on ADP, you're probably going to get a miss on non-farms. If ADP is really bad, non-farms are probably going to be really bad. If ADP is really good, non-farms are probably going to be really good as well, or really high. Well, ADP employment change came in at 103,000. You were expecting 130,000. So it was lower than what Wall Street expected, but it wasn't so low that you caused recession fears. As I indicated before, if you were to see a ADP report between 25,000 and 50,000 jobs, markets would probably freak out a little bit over that. There would probably be recession fears because of that. So you're right in the sweet spot, just above 100,000. That's exactly where you want to be because inflation is falling and it looks like the labor market is slowly weakening. It's not aggressively weakening like we're heading into some kind of imminent recession. Now, on Friday, you're going to have the non-farm payroll report and the unemployment rate. Those will be important. You're still expecting 180,000 job ads for the non-farm payroll report, and you are expecting unemployment to stay at this 2-year high of 3.9%. So any move higher in the unemployment rate, any substantial move higher in this unemployment rate is not going to be seen as a good thing, but that's hard to forecast that following the ADP employment change. That was pretty strong. Now, you're also going to get the Michigan Consumer Sentiment Survey. The big thing here is 5-year and 1-year inflation expectations. I don't know how those are going to come out. They've been going higher recently. 5-year inflation expectations are at the highest level they have been in like 20 years. Considering inflation has fallen a lot, that's strange. I don't know what to make of that, but Wall Street will not like if 5-year inflation expectations go up again. We're expecting them to tick up from 3.2% to 3.3%. So that's a big catalyst coming on Friday, as well as the non-farm payroll report, as well as the unemployment rate. So still do have some big data point is throughout the rest of this week, and I do expect that to give us some moves here in the markets. Now, as far as earnings, we got quite a few earnings yesterday. MongoDB, Centennial One, Toll Brothers, Dave & Buster's, Asana, Stitch Fix, Box. None of those really caused crazy moves, up or down 5-ish% was pretty typical. Today in after hours, you're going to have C3 AI, GameStop, Chewy, Viva, ChargePoint, Braze, Semtech, Sportsman's Outdoors, or Sportsman's Warehouse, Oxford, and Duckhorn. The big three, if you will, C3 AI, GameStop, and Chewy. GameStop, this is the one that could specifically move AMC stock because they're just correlated in that degree. Now, GME, as of recently, if we go take a look at the actual charts themselves and go look at GME here, GME is up 1.17% today. You have rallied from the low at about $11.83 recently for really no reason. Now GME is sitting at about $15 per share. You've rallied, now you're trading sideways. This is probably setting us up for good earnings with GME. That's probably setting us up for a continued rally from here. Maybe a sizable rally from here. Would I bet on this necessarily? Probably not. It's pretty expensive always to bet on GME. Would this be a more attractive bet betting on AMC in sympathy of GME? Probably, because AMC has a lot cheaper options, and they're roughly going to move the same even as they are today. GME's up 1%, AMC's basically flat on the day, down about 3 pennies. They kind of move in correlation already. Now, what you're seeing in the broader markets is Nvidia is down about 1%. Apple's down almost half of 1%. Microsoft's down 1%. Look at Tesla, up 3% today. Tesla is another one that is benefiting from, this soft landing narrative that is playing out, as well as rates going lower. TLT is up 1.41%. That is great news for banks with unrealized losses, and because treasury yields are falling on the 10-year treasury. USO is down 3.85% today. That's pretty insane. The dollar is flat, and gold is up about 0.5%. So, if you couldn't tell already, what's doing well again today? Oh my goodness, I don't know how else to say this, besides I keep saying it. Russell 2000. Your Russell 2000 is up almost 1%. Your NASDAQ is basically flat. Your S&P is flat. Your Dow is pretty much flat on the day. It's your Russell that is up almost 1% that is outperforming. This is pretty impressive. This is exactly what I've been expecting to see, and that is what we are seeing here today. Now, treasury yields, 10-year treasuries are down about 5.5 basis points, down to 4.11%. This is great news, especially if you break under 4%. That's going to be really, really good news. Now, if we take a look at the Fed rate monitor tool for Fed policy, December and January firmly expecting a pause. March still expecting a rate cut. May, it looks like you're not pricing in another rate cut as of right now. That's at 38.5%. And the odds of a pause are 43.5%. This is actually pretty good because you see stocks are doing relatively well today. And you can see this rate cut in May was getting priced in probably because of a weakening economy. So now that that is not getting priced in, you're more so pricing in simplest terms, a soft landing. June, you're expecting a rate cut. July, you're expecting another rate cut. September, you're expecting another rate cut. November, you're not expecting another rate cut. It's close, though. 29.8% for another rate cut, 31.7% chance for a pause. And for December, you are pricing in a rate cut. So right now, we're expecting 1, 2, 3, 4, 5 rate cuts by the end of 2024, and it looks like we're not going to see a recession. In my personal opinion, there is no absolute way that we see a recession. Young Biden just said today that the reason he's running is because we can't have the T-Man win again. And the only way T-Man does not have just a walk in the park way into the office, as badly as a lot of people might not want to see T-Man back in office, is if we go into a recession, right? Or if we avoid a recession. If we go into a recession, he's going to have a pretty easy just walk into the White House again. Because statistically, no president has ever won the White House if you are in a recession during a re-election. People vote on their pocketbooks. They vote on whether or not they have jobs. And right now, I don't think people are too happy. And if you go into a recession, people start losing their jobs, they're really not going to be happy. In other words, I think the odds of a recession are unbelievably low for 2024. The Fed is very political. The reason why they're probably okay with 5 to 6 rate cuts is because they're being pressured by the government. That's what I would imagine. It's not very good going into an election when people can't even, the average household cannot afford the average house in the US, right? That's a problem, okay? You have to make like $50,000 more as a household than the average income of around $88,000 a year to buy the average house. You have to make about $130,000 a year to buy a $440,000 house. If you make $88,000, the average household income, each partner making about $40,000, you cannot afford to buy a $440,000 house. That's a problem. And that's the average home price in the US. So big problems we have, and a recession would just make those a whole lot worse. Now take a look at this volume today. 90.19% of the volume is to the call side. 9.81% volume to the put side. This is a 10-to-1 ratio. 10 times as many calls are being bought for every one put that is being bought. That's off the charts. That is something we have not seen in my recollection for a very long time. Like, I don't think I've ever seen 10 times as many calls being bought on any given day than puts. That's a pretty good sign. Some people are pretty dang bullish out there. Now, take this next information with a big grain of salt. We have a short interest of free float at 10.18%, $141.27 million worth of short positions in AMC stock. I'll give this a second to refresh again. You do have days cover of 0.87, 20.12 million shares currently sold short. Shares out on loan, 12.23 million. Cost to borrow, 1.15%. Utilization of 31.8%. A short score of 55.74 out of 100. Taking a look at the Stonko tracker data, you do have about 4,000 calls currently in the money, 171,000 calls out the money, 12,000 puts in the money, and 35,000 puts that are out the money. So lots of calls that are just outside the money. And if you take a look here at the option chain for AMC stock, let's go ahead and give this a little bit of a refresher so we have the most up-to-date numbers. And for this Friday, you do have about 14,000 for open interest at the $7 call. You're 5 cents away from that right now, so that one should be pretty easy to get above. 750 call has about 24,000 for open interest. The $8 call has 20,000 for open interest. The 850 call has 10,000 for open interest. And the $9 call has 69,000, almost 70,000 for open interest. So if AMC stock does start to make that upside move, don't be surprised if you start to move pretty aggressively in the last couple of days of this week as contracts go into the money. That can start to fuel, to some degree, a gamma squeeze. Now, just a broad look at what's going on with AMC. You're kind of trading sideways ever since hitting the low at $6.52. I think GME could give us quite a move heading into tomorrow. To me personally, it looks like GME is already priced, for negative things, right? Look at the stock. It's way the heck down here. Trading still towards its lows of the last multiple years. It's not going to take a whole lot to get the stock to pop, in my personal opinion. And that could be really good news for AMC stock as well. Potentially send AMC back above $7.50, maybe even close to $8 per share. The big level to be watching for on AMC stock is that 50-day moving average at $8.61 per share. If you can get above that, then it looks really good. The odds look really good, I should say, that we go to $9 plus per share. The RSI at 39.38. Definitely on the oversold side, and the MACD is trading pretty sideways. So let me know what you guys think about all of this information down below in the comment section. Hit that like button and subscribe to the channel if you guys have not done so already. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.